who is the Managing Director, as well as R. Vedhanathan, Global Chief Financial Officer of the company, joining us on the show. A very good morning, gentlemen, and thank you so much for your time. And firstly, let's talk about the tariffs and the implications on your sector, rather. Mr. Vishwanathan, if you can help us understand that what tariff is really doing to your business, because what we believe is that you too have a decent amount of your orders coming in from North America as a market. So what's really there on ground, and what is the impact right now?
Very good morning to all of you, and thank you. Firstly, our North America revenues remain fairly intact because most of the business that we do is based out of North America. So we are not very dependent on the integrated supply chain solution segment is fairly immune to the tariff. But where the tariff could be impacted is in the rest of the world and on the GFS business, the global freight business, where there is definitely uncertainty and the tariff sword hanging above the head. I just want to reassure TVS SCS investors that our exposure to the US market is relatively low, just contributing less than 6% from the freight business. So we keep watching the space. But having said that, it will have an impact on overall trade volumes across the globe, and we are seeing that. There has been a significant reduction in pricing, which has happened over the last couple of quarters, and we continue to see pricing pressure in the freight business. So the freight business is definitely something which we need to keep an eye on. Even in the earnings call earlier in the day, I had called out saying that the global freight business is in a volatile environment. We got to keep watching the space, especially given the trade uncertainties that prevail across the globe. But overall, I would say we remain very confident about our revenue growth, our all the lead indicators in terms of our pipeline and the margin expansion. All of that is playing to plan. But the global freight business is something very pertinent to your question, which is definitely uncertain.
Mr. Vedhanathan, let's look at the operational performance, and I want to talk about the India portfolio in specific, right? Any improvement that you've seen in the margins in the quarter gone by?
Yeah, I think the margins in India business is steady and it is growing up. And as you remember, last year we had taken a portfolio correction, so because of which the margins have improved, and it will continue to improve going forward.
Okay, so that's the take on margins. But let's talk about some more financials. Mr. Vedhanathan, let's talk about your net profit. This time around, the company has reported a net profit of 71 crores due to exceptional gains. But help us understand, what are the plans to utilize this money? How are you going to be deploying this going ahead?
So what we reported is a share of profit of a joint venture in TVS ILP, where the TVS ILP divested their warehousing assets to a InVIT trust, which is the 177 crores of gain that we booked in Q1. And I think going forward, TVS ILP will continue to develop assets and transfer it to the InVIT, and there will be some gain going forward from the ILP. In terms of how we will deploy these assets, I think right now the priority is for us to reach that 4% PBT margin, which we are targeting. That will be the priority, and most of the investments will be towards that 4% PBT, achieving the 4% PBT target.
Right. Ravi, give us a color on what your order pipeline is looking like right now and what the execution timeline could be.
So our order pipeline remains pretty healthy. We are right now seeing a record high of about 5,300 crores in our order pipeline. Some very, very key opportunities both in India and in the rest of the world. That's why I said all the lead indicators are fairly good and remain in plan. So we continue to be bullish about the fact that we can deliver double-digit revenue growth based on what we see in the pipeline.
All right, but along with that, what we also understand, Mr. Vishwanathan, that last time you did speak about the clear actions, points to be taken, wherein the price hikes, cutting costs, shifting work to India, these could be some of the key focus areas that you will be working with. Help us understand that going ahead, how do you plan to do all of that? And since you just given us your target to maintain the double-digit revenue growth guidance, so what steps will you be taking in that direction?
I think in line with what we said last quarter, the company has already initiated strategic action towards all of that. We have combined our IFM and ISCS portfolio into one segment, and in the UK and Europe, we have combined all of the business under one leadership, and that's resulting in what we call the Project One, which is really about restructuring, management restructuring, cost out, right sizing, right shoring, consolidation of warehouses. All of that is already in play, and we expect all of that to be completed by Q3 this year. And we expect that will deliver about 50 to 60 crores of bottom line improvement this fiscal year. And going forward, we expect that to continue, which means that we expect an annualized savings of about 100 to 120 crores based on all of these initiatives, of which about 50% will be realized in this fiscal year itself. So we are very committed towards that. We have already started acting on all of that in terms of right sizing and right shoring and consolidation of all of our warehouses, especially in the European business, while we continue to do all of those cost out in every other geography that we're operating in.
Mr. Vaidyanathan, tell us a little bit more about your restructuring program in the UK and Europe. Help us understand how much of a financial benefit is this going to reap for the company, that's the restructuring?
Yeah. See, the restructuring cost that we have taken, the benefit will be about 100 to 120 crores of the benefit that we will see on an annualized basis. In FY26, the benefit could be partial, somewhere around 50 to 60 crores is what we are estimating.
All right. And lastly, tell us more about the financial performance of your final mile logistics business. How do you see the numbers shaping up for this particular segment?
So I think IFM, as you may recall, it had a turnaround last year, and we see a significant improvement in their profitability in Q1. I think we are very confident going forward. I think the trajectory will continue. The profitability for the integrated final mile will improve. With all the actions that we have committed has been taken, and we can start seeing the results in this current financial.
Okay, Ravi, Mr. Vaidyanathan, both of you, thank you so much for your time and speaking about TVS Supply Chain's performance in the quarter gone by, and of course the visibility going forward as well. But let me now welcome on board Shweta Arya, MD at Cummins India, joining in on the show right now. Shweta, firstly, congratulations. It's a great set of numbers. You've delivered strong domestic sales growth,